A shift in power. Sellers adjust to a cooling market. The U.S. housing market is undergoing a significant transition after years of rapid price growth. For much of the past decade, buyers have grappled with a highly competitive market characterized by low inventory and soaring prices. Sellers held the upper hand, often receiving multiple offers and selling their homes for well above the asking price. This seller's market was fueled by a confluence of factors, including low mortgage rates, a robust economy, and a shortage of new construction. However, the landscape began to shift in late 2022 as mortgage rates started to climb. The Federal Reserve's efforts to combat inflation through interest rate hikes rippled through the economy, driving up borrowing costs for homebuyers. As mortgages became more expensive, buyer demand began to wane, leading to a cooling effect on the previously red-hot housing market. This shift in market dynamics has become increasingly apparent in recent months, with data revealing a notable increase in price cuts by sellers. According to a recent report from Redfin, the share of homes listed with price cuts has reached record highs in many markets across the country. This indicates a growing recognition among sellers that they may need to adjust their pricing strategies to attract buyers in the current environment. The days of expecting top dollar and multiple bids seem to be fading as the market transitions from a seller's market to one that is more balanced between buyers and sellers. This shift presents both challenges and opportunities for those navigating the real estate landscape in the coming months. The rising cost of borrowing. Mortgage rates impact affordability. At the heart of the housing market shift is the dramatic rise in mortgage rates. After hovering at historic lows for several years, rates began an upward trajectory in 2022, reaching a 20-year high in recent months. This sharp increase in borrowing costs has had a profound impact on affordability for prospective homebuyers. As rates climb, the amount of money buyers can borrow decreases, limiting their purchasing power. This is particularly challenging for first-time buyers who may already be struggling to save for a down payment and closing costs. The affordability squeeze caused by higher mortgage rates has led to a decline in demand. Potential buyers who may have been considering entering the market are now priced out or choosing to delay their home purchase until rates become more favorable. This decrease in competition among buyers is a key factor contributing to the increase in price cuts observed in many markets. Sellers are recognizing that they can no longer expect the same level of demand as they did when rates were at historic lows. The impact of rising mortgage rates is not limited to affordability alone. Higher rates also affect the monthly mortgage payments that homeowners face. For those with adjustable-rate mortgages, rising rates can lead to significant increases in their monthly payments, putting a strain on household budgets. Even for homeowners with fixed-rate mortgages, the higher cost of borrowing can make it more expensive to refinance or tap into home equity for renovations or other expenses. The overall effect of higher mortgage rates is a cooling effect on the housing market, as both buyers and sellers adjust to the new financial landscape. Navigating the shift. Price cuts offer opportunities for buyers. While the shifting housing market presents challenges, it also creates opportunities, particularly for buyers who have been priced out or sidelined during the recent years of rapid price growth. The increase in price cuts offers a glimmer of hope for those seeking to enter the market or upgrade their current living situation. As sellers adjust their expectations and become more willing to negotiate, buyers may find themselves in a stronger position to make offers and potentially secure a home for a lower price than they might have expected just a few months ago. However, it is important for buyers to proceed with caution and avoid getting caught up in the hype of price cuts. Not all price reductions are created equal, and it is crucial to conduct thorough research and due diligence before making an offer. Buyers should carefully analyze market data, compare prices of similar homes in the area, and consider factors such as the home's condition, location, and potential for appreciation. Working with a knowledgeable real estate agent can be invaluable during this process, providing guidance and insights to help buyers make informed decisions. Furthermore, buyers should be prepared for the possibility of continued market fluctuations. While the recent increase in price cuts suggests a shift in favor of buyers, it is still too early to predict the long-term trajectory of the housing market. Factors such as inflation, interest rates, and the overall health of the economy will continue to influence market dynamics in the coming months and years. Buyers should stay informed about market trends, be patient in their search, and be prepared to adjust their expectations as needed. Supply and demand dynamics, inventory levels, and buyer competition. The balance between supply and demand is a fundamental driver of prices in any market, and the housing market is no exception. In recent years, the U.S. housing market has faced a persistent inventory shortage, particularly for entry-level and affordable homes. This lack of supply, coupled with strong buyer demand, fueled rapid price growth and created a highly competitive environment for buyers. However, the recent shift in market dynamics has led to some easing of inventory constraints, albeit not uniformly across all price points and locations. As mortgage rates have risen and buyer demand has cooled, the pace of home sales has slowed. This slowdown in sales activity has contributed to a modest increase in the number of homes available for sale in some markets. While inventory levels are still below pre-pandemic norms, the increase in supply provides some relief for buyers who have been facing limited options. However, it is important to note that inventory levels can vary significantly by location, with some markets experiencing tighter supply than others. The easing of inventory constraints has also led to a less competitive environment for buyers. In the height of the seller's market, it was common for homes to receive multiple offers, often above the asking price, leaving buyers with little leverage in negotiations. However, as competition has cooled, buyers may find themselves in a stronger position to negotiate with sellers, potentially securing more favorable terms or concessions. This shift in bargaining power is another factor contributing to the increase in price cuts observed in many markets.